Ladies and gentlemen, may I have your attention, please?
Covering both sides of the big issues with the analysis you trust on News Radio 1040 WHO.
President Trump has, in fact, established tariffs, 25% on Canada and Mexico. Those countries have responded, oh, yeah, we tariff you back. And he is scheduled to talk to leaders in both Canada and Mexico today. Financial strategist Bill Dendy is back with me as we talk about the potential implication to us as consumers. Bill is on the Davison Family Dentistry Newsmaker line. Good morning, Bill. Always a pleasure to hear from you. Welcome back to WHO.
Good morning. It's great to be with you. And if consistent, doing what he says he's going to do, Trump, sure enough, even though a lot of people said it wouldn't make sense to do it, and there's no way he'd actually do it. Basically, across the board, 25% tariffs. Fuel is the only thing that was saved, and it's still a 10% tariff from Canada. I mean, what a big reaction we will expect from the stock markets throughout the week as people try to digest what this means to their investment portfolios, what this means to our GDP, and for us individuals, what does this mean to our own pocketbook?
Yeah, absolutely. And my view is, Bill, on this, President Trump was very frank last night in talking to the media, and he said, look, there's going to be short-term pain for long-term gain. And I do think that the people are going to be with him for a little while because they support what he's doing. But I think if it's long-term pain, then a problem is going to occur, and people are going to perceive the tariffs a lot less favorably. What are you thinking this morning, Bill?
Well, absolutely, especially with tariffs that are going to impact our groceries. I mean, I don't know why it is that that's where people seem to have gotten the most upset about inflation.
Yeah.
It's at the grocery store, because I guess we need to consume groceries, so consumers consume that the most. And, that's going to hit us hard because we get our fruits and vegetables and meats from Mexico and grains and meats from Canada. And these things have already gone up 20 to 25% over the past 3 years. And the tariffs will hit them hard, especially things like, like avocados. The majority of all avocados that we consume in America come from Mexico. So this is like the avocado guacamole tax right before the Super Bowl. That's not a good thing. People aren't going to like this. But I do know that according to Cato Institute and other economists, even if Canada and Mexico retaliate, this has a bigger impact on their economies than it does our economies. We may lose 0.3% in GDP. They're losing 10 times that or more. So that's a big deal. It should cause action. I think it's interesting that instead of coming up with some other way to respond, they responded with tariffs that, again, hurt their citizenry, that hurt our manufacturing some, but actually is not perhaps the best response, although it does seem tit for tat.
Yeah.
Kind of as you said, we tariff you back, but that may have not been the most intelligent response, but it may be all they got.
Financial strategist Bill Dendy on News Radio 1040 WHO. So, Bill, what I'm hearing from you, because everyone's just wondering this morning, where am I going to feel the impact, and is it going to be immediate? And you talked about this being a guacamole tax in advance of the Super Bowl. So you're thinking, yeah, we're going to see it in groceries. We're going to see it pretty immediately. Am I right?
Well, groceries are purchased oftentimes fruits and vegetables weekly to every 2 weeks. And so if the tariffs hit, where collections are starting this week already, we're probably going to see the impact within 2 to 3 weeks, especially in that area, because grocery stores don't operate on big fat margins. The grocer can't absorb it. The seller might try to absorb it for a while, but it's probably going to end up being the consumer that sees a quick response and price increases. They pass those increases on to us. After that, a lot of things in the manufacturing, over $70 billion worth of goods and car parts come from Mexico. But that may take a little longer because those things have inventories that don't deplete as quickly, but we'll see that too. And then lumber from Canada, as we're in reconstruction in lots of the U.S. because of storms and fires. The lumber that we get from Canada will probably go up pretty quickly because that is an intermediate shelf item that we'll probably see the cost passed along, even though the margins are a little thicker in that area.
And Bill, maybe I shouldn't look at my retirement account for a little while. You think that the stock market is going to be kind of shaky and maybe on a downturn for a bit while people worry about these tariffs?
Absolutely. And in fact, for those who've been in the market over the past few months, they're already used to this volatility, as we had the euphoria right after the election, followed by the realization that many of Trump's policies may be inflationary, which may cause the Fed, and they did. They came out and said they're not going to lower interest rates like it was already built into the market price, so prices readjusted again. I mean, at election time, people were excited because deregulation and lower taxes on companies means higher corporate profits, so they have to be worth more money. So the stock market went up. But that was based on the interest rates coming down, making it easier for companies to borrow. But when the Fed said no, rates may not be coming down as fast, so well, then the market readjusted, saying things weren't worth as much. Now with the tariffs across the board, that will cut about 1/3% or more from our GDP. So things have been already priced down, and it's rocking international markets because they respond with tariffs of their own, which could be the onset of an overall trade war, which causes things to have to be revalued. I mean, for the investor, the market's looking schizophrenic at the moment. But as Trump said, long-term gain is where it's at, and long-term views in the stock market make sense for individuals. It's a time to make sure that your portfolio is structured such that you may not have to sell anything for the next several months because it can be a rough ride. And we haven't had a big correction in some time, and it may be just the excuse that a lot of traders are using to take their profits and sit on the sidelines for a while, which will impact the rest of us who are long-term investors.
Financial strategist Bill Dendy, really important analysis and great analysis this morning. Bill, it was a pleasure talking with you. Thank you very much for talking with us at WHO Radio.